the fall off in product sales, especially firewalls, which accompany networking devices, networking sales. Again, due to that pandemic era spending spree on data centers, on network capacity upgrades. And now also paired with that, we're also getting that slowdown in services.
So the big question is, can Fortinet pull this off, Nick? The risk, of course, is no. This could be an ex-growth business, and that's why the market has begun discounting the stock. Welcome back, everyone, to Chip Stock Investor. Today, we're going to be talking about one of our favorite cybersecurity companies, Fortinet. And as many of you saw, the stock tanked again after earnings release last week. And we need to talk about this because we covered this in August when it had its Q2 2023 earnings release, and the stock had tanked after that as well. So we're back down to a share price of around $50. So we need to talk about this disaster. Nick, what do you think?
For sure, Casey, we do need to talk about this. So Q3 2023, it was actually pretty solid, mostly in line with expectations based on management guidance for over a year now. Lower product-based growth, especially for firewalls. These are security appliances like for data centers and remote branch offices, but continuing consistent services growth. So what was it that caused the stock to tank? Well, it was guidance. Surprise, folks, if you haven't figured it out yet, let us remind you, the future is what matters most when valuing a stock. So that's what's going on here. It's future guidance.
So let's take a look at our cyber industry breakdown bubble chart. Fortinet is a top cybersecurity company, the second largest pure play in the industry by revenue and market cap after Palo Alto Networks. Both of these we own and make up by far the bulk of our bets on cybersecurity. Fortinet historically plays in the network security category, as has Palo Alto Networks, and Fortinet has been a standout long-time winner because of its custom-designed security processing unit, or SPU chips, that have been used in its firewalls. Those are a piece of hardware, really a specialized server used to secure things like a business branch office or location or a data center. And this specifically is why this company is a chip stock investor favorite. It marries software and hardware. But Fortinet is making a pivot towards that cloud security segment. And we'll talk about that a little bit more here momentarily.
Right. So, Casey, just so everyone's clear, again, network security or secure network part of the industry is where Fortinet plays, and that is what harbors most of their product sales. They are the convergence of network hardware and security. So specifically the devices used to run all of the software. That's that big bubble in the upper left. But we're going to talk a little bit in a bit about security operations or SecOps, as well as the SASE market, SASE, SASE. We'll talk about what that is, like you said, in just a moment. Casey, let's maybe first go over the Q3 2023 numbers, though, just for some added context before we delve into the specifics.
Before we get to those high-level numbers, let's first talk about the stock price. We know that if you bought Fortinet recently, what just happened is incredibly painful. And we're not immune. We don't like to see our investments decline like this. But that said, the share price is merely back to the same level where it was at the start of 2023 and at the same level as summer of 2021. This is normal growth stock behavior and certainly good performance considering two bear markets in the last 3 years. This is why it's important to diversify. Individual stock prices are highly volatile, and it's important to build a position over time, perhaps even over the course of several years.
Right. And I think that's important context, Casey. This is just our personal investment style. You can see our past videos on how we do our research and how we build our portfolio. But at any rate, yeah, the stock price doing what it just did, Casey, it does hurt. We're not trying to be flippant about this, but it's important to zoom out before making big, drastic decisions with your portfolio. I like that context, Casey. Thanks for adding that.
Okay, now for the high level numbers for Q3 2023. Revenue was up 16% year over year to 1.33 billion. That's a 3-year and 14-year CAGR rate of 27%. Service revenue up 28% year over year to 869 million, compared to 3 and 14-year CAGR of about 27% and driven by 34% growth in higher margin security subscriptions, which represents 57% of total service revenue. Product revenue was down 0.6% year over year to 466 million, compared to 3-year CAGR of 28%.
Now, I'd just like to interject real quick on this point here, Casey, before you move on to the rest of the Q3 numbers, that the last 3-year CAGR growth of product revenue is far higher than it has been since Fortinet's IPO in 2009. Again, we're going to address this later on here in our discussion, but I just want to point that out. As you might expect, the product revenue, or let's maybe call it like the semiconductor chip stock based part of Fortinet's revenue, is, no surprise, a bit cyclical, more cyclical than obviously the subscription service revenue part of the business. So basically what we're getting here is a cyclical decline in product revenue after what was an absolutely epic explosion in growth over the last 3 years as a lot of companies built out new network capacity in the wake of the pandemic in 2020.
Nice points, Nick. Thank you. So GAAP operating margin 22.7% versus 23.1% in Q3 2022. On an adjusted basis, operating margin 27.8% versus 28.3% last year at this same time. GAAP earnings per share of 41 cents versus 29 cents in Q3 2022. Share count was reduced by nearly 1% year over year. On an adjusted basis, 41 cents versus 33 cents year over year. Free cash flow, 481 million. 36% was the free cash flow margin versus 395 million in Q3 2022's 34% free cash flow margin.
Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. As far as it appears on the surface, we obviously have the slowdown in the product revenue that's reducing overall revenue growth. But here's the real reason why the stock tanked again. So management, which when we refer to management, we're saying co-founder and CEO Ken Z, who started Fortinet in the mid-2000s after selling another one of his startups to Juniper Networks, and then the CFO, Keith Jensen. Basically, what happened is they missed their own guidance for billings, which came in at 1.49 billion in Q3 versus the guidance they provided for 1.56 billion to 1.62 billion. So a fairly significant miss of about $70 million from the low end of their guidance for billings. Billings, again, are the value of invoices sent to customers. Now, here's where I think things get a little bit worse, and maybe some investors were hoping for a quick improvement in billings, but that's not happening. So billings in Q4 are expected to be negative 5% year over year in Q4. So we're going to get a drop in billings. It was only 6% growth in Q3, and it's going to dip to negative 5% in Q4. So nevertheless, the big takeaway from guidance is Fortinet will be a single-digit percentage revenue growth business through at least maybe the midway point of 2024. So we're looking at 6 to 8 months, let's say, of closer to flat-ish year-over-year growth. The reason? We can blame the sudden fall off in product sales. Again, that's, let's call it the semiconductor custom chip based part of Fortinet that's cyclical. The fall off in product sales, especially firewalls which accompany networking devices, networking sales. Again, due to that pandemic era spending spree on data centers, on network capacity upgrades. And now also paired with that, we're also getting that slowdown in services, software-based services, much like the rest of the cloud industry has this year, as large customers in particular hold up on spending to manage their own cash flow.
So, is something wrong? Is this now an X growth business or is this just a lull? After all, global cybersecurity industry spending is expected to be a low teens growth market for years and will pass up $500 billion annually at some point, we think by the end of this decade. Is Fortinet now going to get left behind after years of outperformance? CEO Kinsey provided some great context, and we learned some new things about Fortinet during this call. Management was remaining mum on some of these topics up to this point for obvious reasons in market competition, but now we know some of the details. Looking at our bubble chart again, network security, as we already knew, was the majority of Fortinet revenue, but it was revealed to be 70% specifically in Q3 2023, or around $930 million. That is hitting the skids and tanking guidance, at least for the near term, as customers ingest all that expanded network capacity they built since 2020. Fortinet is pivoting its sales teams away from this for the time being. However, Z did say on the earnings call that the security networking market is valued at $62 billion and is projected to increase high single digits annually to $86 billion by 2027. Now, in contrast, the cloud security segment Fortinet is pivoting towards, security ops and SASE, will grow faster.
Yeah, Casey, just for context here, SASE, SASE, is an acronym that stands for Secure Access Surface Edge. More on that in just a sec. So here's what Ken Z, the co-founder and CEO, had to say about these two markets. So security ops, SecOps, $46 billion market, growing at a mid-teens annual rate to $78 billion by 2027. He continued, Fortinet's SecOps platform is comprehensive and integrated, offering EDR, CM, SOAR, NDR, and other integrated solutions. A bit of context here on SecOps. Maybe this sounds a bit familiar. Google Cloud made a key acquisition in this space, a company called Mandiant, formerly known as FireEye. If you've been around the cybersecurity market for a while, you probably recognize those names. In addition to that, Cisco is also purchasing Splunk. A mega acquisition there. We did an article write-up on that a few weeks ago after the acquisition was announced. Splunk also does a lot in this space with its security orchestration, cloud observability software, and such. So that's what SecOps is. And SASE, again, I'll quote Ken Z here, SASE is a $17 billion market expected to grow at a 20% compound annual growth rate to $36 billion by 2027. We believe Fortinet is the only company with a SASE service solution that can perform all functions in the cloud or in an appliance, all with a common operating system, including full networking and security stack, market-leading SD-WAN or software-defined wide area network, offering ZTNA, that's Zero Trust Network Access, or sometimes referred to as Zero Trust Architecture. Basically, those annoying prompts that you get to enter your password, or a push notification that you constantly get to verify your identity all the time, and Management Console. Our SASE service solution is supported by Google Cloud with over 100 worldwide SASE cloud locations, together with our own 30 plus points of presence, or POPs, and data centers.
Let's break this down in simple terms here. This is how we explain the difference at Chipstock Investor. SASE, or ZTNA, that Zero Trust Network Access, are in support of new cybersecurity where employees can be logging in from anywhere. So this new security, we like to describe more like a counter spy or counterintelligence agency versus traditional cybersecurity, which acts more like a castle and a moat, where employees only log in from the branch office. In this post pandemic world, there's a place for both security architectures, but the counterintelligence model is the clear new growth market now that the network capacity has been upgraded in mass.
Now, Casey, we had an article again a couple of weeks ago about this. So, what we're showing here is those Google Cloud data center locations. This is provided by Google Cloud. First, you can see all of the different locations and then a map showing all of those locations. These are actual data centers or those POPs. So in mid-October, Fortinet actually prepped us for this pivot towards their SASE service, the Secure Access Service Edge, which really think of it as the convergence again of cybersecurity service and software with the networking, the hardware that actually runs that software. This is exactly what Fortinet does best. So they announced the expansion of those POPs, those data centers, having hardware installed in a local data center for routing customer network traffic through. Fortinet now installing a bunch of its equipment in Google Cloud to increase its customer experience, you could say. Better network performance if you can get those data centers with your hardware in it located closer to the customer. Now, we think this is a huge, huge announcement Fortinet made. Of course, if you own Alphabet stock, Google Cloud, like we do, this is also great for them too. You get an expanded customer, a larger customer relationship. But for Fortinet specifically, as they lean into the SASE and SecOps business, they're getting a key customer in Google Cloud. So it'll be important to monitor this. But here's the new data point that's interesting that we didn't have a lot of visibility on before. So we said 70% of Fortinet's business before was network security. But as of Q3, SASE was actually 20% of revenue, about 260 million in revenue, and SecOps was at 10% or about 130 million in revenue last quarter. So SASE in particular, much bigger than we thought. And again, expected 20% compound annual growth rate over the next few years. This is a sizable business for Fortinet that could get really, really big over the next few years. Now, SASE in particular is interesting. Now, this competes with companies like Palo Alto Networks, the leader in single vendor SASE. You can see here the Gartner Magic Quadrant that Palo Alto Networks is very proud to show off. They're the lone leader in single vendor SASE. I'll also point out here, they're not listed by Gartner because they don't completely meet all of the definition that Gartner claims to make a company a SASE cybersecurity business, but Zscaler. Technically, they're more of what's called a secure service edge, SSE business, more than it is SASE, but we're getting into a topic that is for another video. Okay, Casey, rein me in here.
Fortinet management believes it can win by upselling its networking customers. Plus, those custom chips that power the networks will now be powering the new SASE service. So we think this, again, is a big differentiator, especially versus a company like Zscaler, which tends to use off the shelf servers for its offering.
Okay, so let's maybe bring this home here, Casey, and talk about the overall outlook for the years ahead. Because if you remember, about a year ago and early this year, we had shared Fortinet's presentation where they expected high double-digit growth and profit margin expansion over the next 3-ish years. Has that radically changed? What should we expect now going forward, Casey, after this period of, it looks like hypergrowth for Fortinet has come to an end?
Notice what CFO Keith Jensen said about that, Nick. He said secure networking, which currently accounts for 70% of Fortinet's business, is expected to experience lower growth following 2 years of very robust growth. As a result, for the near term, we expect to deliver healthy profitability along with more modest growth. With execution and continued investment in the SASE and SecOps markets, we believe we can return to delivering mid to high teens top line growth and while continuing to deliver operating margins of 25% or greater. In other words, a return to balanced growth and profitability, which has led Fortinet to achieve the Rule of 40 status in 12 of 15 years, as shown in slide 19, which we'll show you right now. In short, slower growth for a while, but faster expanding profit margins.
which, Casey, again, Fortinet had its IPO in 2009 when it was really just a startup. And it has been a fantastic investment since then. Market obliterating investment in the cybersecurity market, achieving the rule of 40 in 12 of the last 15 years. That's a combination of when you add revenue growth plus profit margins. If it exceeds 40, you buy more shares of the company. So they still think they can continue to achieve that rule of 40 after a brief blip for a few quarters.
So the big question is, can Fortinet pull this off, Nick? The risk, of course, is no, this could be an X growth business. And that's why the market has begun discounting the stock. What do you think? Quick break from chip stock investor Casey, and I wanted to talk to you about Main Street Data. Main Street Data is a data visualization and charting platform that helps investors analyze companies in the stock market. Because the stock market is so complex, it can be very difficult to make informed investment decisions without the right tools. Main Street Data gives you the tools and information you need to make better investment decisions. Main Street Data offers a variety of benefits, including data visualization, charting tools, and company earnings calls transcripts, which are an easy way to reference up to date comments from management of your favorite stocks. You can sign up for Main Street Data today and get a special discount through our link below in the description.
Yeah, it's a big if, right? Casey, maybe backing up to your discussion on the stock, we'll say that this is not abnormal for a growth business, especially one that is beginning to mature in some respects. That being said, Casey, Fortinet has been here in a similar situation before because we think this investment and thus your stock investments should be measured over the course of many years. Let's go all the way back almost a decade to 2014. So this is a few years, about 5 years after Fortinet has its IPO in 2009. They had an amazing run following the easing of the great financial crisis. But then remember in the 2010s, like all of the talk back then was the economy is not growing. GDP growth is stagnant. The Fed had interest rates at close to zero for the whole decade, trying to help stimulate some economic growth. And this actually hit companies like Fortinet at one point. If you look at the fourth quarter of 2014 here, we have some old charts picked up from their old presentations. You can see excellent revenue growth, 30% revenue growth, which you could expect for a smaller business, 224 million in quarterly sales. That's right. Only 224 million in quarterly sales in Q4 2014. But interestingly, it was a 50-50 split between product sales and services sales. Compare that to today, where services now ballooned to 65% of the total, in spite of that stellar run in product based growth. Now, here at this stretch in the mid 2010s, let's say Fortinet actually started to lose a little bit of steam. They revamped their investment, started pouring money into research and development to bring new products and new services to market. Their free cash flow actually flatlined for a while. The return on invested capital, if you're a fan of measuring a business's progress by ROIC, you can actually look at this and see a big dip in ROIC in the mid 2010s.
Maybe just to double down on this point about Fortinet's organic growth, we can compare them to Palo Alto Networks, which went on an acquisition spree when Nikesh Arora took over as CEO in 2018. And this was around the time that we started buying both of these stocks versus Fortinet, which has done a brilliant job in the organic growth department. Look at the small scope of its products and services nearly 10 years ago. It's grown both, and because it's organic, it has those superb profit and free cash flow margins. But during the mid 2010s, when it was embarking on new product and service expansion, revenue growth and free cash flow margin also slowed. We are in the midst of that same thing happening once again. It's possible that some strategic acquisitions could accelerate SASE expansion, but we would really prefer Fortinet to continue focusing on organic growth. That's what they have done best. CEO Mr. Z and CFO Mr. Jensen, if you're listening, please don't pander to the short-term investor demands. We are happy with your track record on your return on invested capital.
Yeah, indeed, we are. Just since we've been shareholders, it's been a great run, even including this less than pleasant dip the last 2 quarters. Casey, maybe I'll also add this to the mix as well. That stock buyback increase is actually a really, really good sign in management's confidence that this is a short-term lull. Now, things could, of course, continue to deteriorate. I think this is still worth pointing out because this is not a stock buyback plan. This is actually being executed now. They repurchased an incremental $100 million more in stock buybacks in Q3 2023, up to $600 million versus $500 million last year. Management is buying the dip. That's what that means here. They consistently return cash to shareholders via repurchases anyways, but it looks like they are gearing up to ramp up even more.
With all that being said, Nick, let's talk about the valuation and whether or not this stock is reasonably priced at this point now that it's taken a very large hit in the last week or two.
Okay, so it was a solid Q3. The stock tanks. And so obviously, whenever that happens on a trailing 12-month basis, you end up with a far more reasonable price tag than before. That being said, shares trade for 35 times trailing 12-month earnings per share. However, on a free cash flow basis, which I think this is more meaningful metric for where Fortinet is at currently, on a free cash flow basis, it's trading for 20 times trailing 12-month FCF. So going forward, we don't have a ton of visibility into 2024 at this point, other than they think revenue will reaccelerate to a high teens rate by the second half of next year and profit margins will expand. If they deliver on this, are shares reasonably valued? Yes, we think so. But again, I think this bears emphasis. Only if Fortinet does indeed reaccelerate its overall growth by the midpoint of next year, or let's just say at some point next year and beyond. So clearly the miss in expectations the last 2 quarters isn't great. Cycles like this aren't unusual though. Palo Alto Networks had something similar happen a few years ago before they reaccelerated over 20% growth. Casey, also it bears stating here, a lot of customers are tightening their budgets this year. Maybe that changes in 2024. The current Federal Reserve driven high interest rate economy or higher interest rate economy is anything but normal or healthy, in our opinion. But neither was the Fed driven zero interest rate economy of the last decade. So I don't know. I'm shrugging my shoulders here. This is investing in businesses. It's a wild ride one way or the other.
It's definitely a roller coaster of emotions, isn't it? Fortinet deserves monitoring over the next year to see if progress is being made in this new strategy. But what else is new? We're constantly monitoring these businesses. This is the name of the game in investing in individual stocks. So we still believe at Chipstock Investor that Fortinet has the right mix of more gradual growth, expanding profit margins, and cash return to shareholders via buybacks for now to be a superb long-term compound grower. We aren't adding here because we have a full position. If there are further bumps in the next few quarters, we might consider upping our investment.
Yeah, hang in there, folks, if you're a Fortinet shareholder. But do know this has happened before in the past. This is not an epic disaster or an implosion. So just monitor the situation. Zoom out, consider the context, consider the nuance compared to what you're going to see in the media. We hope that's helpful. Casey, let's do a quick preview. What can the folks at home expect for this week?
They can expect Apple versus Qualcomm in on-device AI and laptops. That's an interesting and hot topic that I'm excited to learn some more about. And then a new energy industry, including updates from air products and chemicals, the lithium market, and Tesla's new lithium refining plant in the Gulf Coast in Texas, United States. So we have a lot of interesting stuff coming up. Stay tuned. Make sure you hit the subscribe button so you don't miss an episode. Make sure you have your notifications turned on. We're still really hoping to get to 10,000 subscribers by the end of the year, and you are all helping us out very much. We appreciate it. Keep subscribing. We hope you are enjoying our content and the channel. We'll see you all again soon at Chip Stock Investor.